Okay, dealing with debt. I don't. We got any lenders in the crowd? Uh-oh. I gotta be careful. I gotta change my slides now. No, I'd appreciate if you guys jump in on this. So if you're financially stressed, what can you do? I find that instead of assuming your creditor is out to get you, you should assume your creditor is there to work with you. Now, I'm talking about, your local banks. I'm not talking about your credit card companies, things like that, but the people you work with, the people you know. Give them a call and explain the situation to them. And the sooner you can do that, the better. If you're under financial stress, let them know, okay? Banks and lenders are not there to foreclose on you. They're there to do business with you. So if you're under financial stress, ask about the potential for maybe extending the term of your loan. Can you write any of the principal off? Can you maybe reduce interest or late fees? Always ask for that. Now, will you get it? I don't know, but I know you won't get it if you don't ask. But I find that lenders, if they think you're viable and they can help you, I find that they will try to help you first because they don't want to foreclose on you. It's not good business for them. So I always want to point that out to clients is don't be afraid of your lender, work with your lender. What do you guys think of that comment? What do you want to add to it?
The sooner the better.
Okay. That's right. Yeah. I'll give you when somebody tells me that they're selling, if a dairy farmer tells me they're selling heifers to generate cash flow, to me, they're probably too late to call their lender. To me, that's just my threshold. If you're starting to sell replacement animals to generate cash flow, you are in a financial stressed situation. You need to be talking to your tax advisors and your lenders at that point. Don't wait till you've sold all the heifers you can, then talk to your lenders. As soon as you see a sign of financial stress, start acting on it. As far as the different kinds of debt, I wanted to make sure you had an idea about this. So there's secured debt and unsecured debt. These guys are all secured debt, I bet. They've got either mortgages on your land, they've got liens on equipment, cattle, that sort of thing. So that means they're secured. They've got collateral to back up their loan. You're also going to have unsecured debt. Credit cards is the big one for most people, but it may be your feed bill, your AI bill, whatever you got. And generally, I find that unsecured creditors are more likely to work with you because they're more at risk of not getting paid. If you go and file bankruptcy, they're the ones that tend not to get paid. Your secured creditors with the mortgage, they're going to get paid. Will they get paid 100%? Maybe not, but they're going to get the vast majority of their money. So they're going to be less likely, how do I want to say this? You're going to have less leverage over them, but at the same time, they'll still work with you in a lot of cases to help you out. But I just wanted to make sure you understood there's two kinds of debt you're going to have, and how you approach workouts on those can be very different. Any questions so far? Okay. A little bit about bankruptcy. So I'm not a bankruptcy attorney, so I can't go into a lot of detail because I don't know a lot of detail, but I do want to talk about the topic so at least you understand it. A lot of people think bankruptcy means the end of the business. It doesn't necessarily mean that. Bankruptcy is legal protection for you, the debtor, so that you can pay what you can pay and you're not saddled the rest of your life with debt that you're never going to pay off, and you never can be basically a productive person again. At least that's my interpretation of the bankruptcy code. But, you know, a bankruptcy doesn't have to mean total loss, total, you know, getting out of the business. It can mean you just need time to get going again. You need some relief on your debt. You need your debt extended so you can match it up with your cash flow. So let's look at the different kinds of of bankruptcies. It's basically 4 kinds. There's probably more than that, but for our purposes today, we're going to talk about 4. So there's Chapter 7. So this is the bankruptcy that you you get rid of everything you own except, you know, your personal belongings. I think you're allowed 1 vehicle, and you're allowed $125,000 of your residence. So, you know, the courts don't want to throw you out in the street with nothing. But, you know, you got to give up, you know, your cash and retirement accounts, depending on what they are, tend to be protected, but not always. But Chapter 7 is where you say, I'm getting rid of all my assets. The court, the bankruptcy trustee takes those assets, pay what creditors you can, you know, pay, every creditor gets 10 cents on the dollar, that sort of thing, and then you're relieved from that debt. Okay? So that's people that run into large credit card debt. You know, that's more of a, well, it can be a big business bankruptcy too, but Chapter 7 tends to be more of people who just get in over their head. They're never going to be able to pay that debt. They have limited assets, so they go to Chapter 7, pay what they can, and then they're relieved of that debt, and they move on. Now, they can't turn around the next year and file again. I forget how long you have to wait. So it's not as easy to go back into bankruptcy as you might think. You do have to wait a while. Chapter 11 is kind of big business bankruptcy. I'm going to skip that for right now. So Chapter 13 bankruptcy. This is kind of sometimes called the wage earner bankruptcy. This is for people who are making money. It's just that their cash flow can't pay their debt. And so people under Chapter 13 go to the court and say, look, I got a job, I've got a business, I'm making money, but I can't pay this debt load as currently structured. So those people go to the court and say, look, if you can maybe restructure my debt, if we could get rid of some of this unsecured debt and maybe restructure my secured debt, I can pay my creditors off under those circumstances. And then the bankruptcy will last 3 to 5 years typically. And at the end of that bankruptcy, they're relieved from bankruptcy as long as they've met all the conditions. So this is where I'm saying a lot of people just think of bankruptcy in the Chapter 7 sense, is that I got to liquidate, I'm done. It's not the case. Chapter 13 will let you restructure debt and move on without losing all your assets.